Last week, the USD/JPY and the 10-year Japanese government bond yield reached their convergence points. If you made profits, congratulations. Now let's take a fresh look at this week's forecasts. I will share the financial market predictions for this week from September 22nd to 26th. Welcome back to this week's Market Outlook. This week, our key theme is US government shutdown. This time, it may really happen. This prediction is based on a statistical analysis of more than 200 weeks of data, covering 17 different financial markets including currencies, interest rates, and commodities. Let's take a look at the convergence points profit-taking targets for this week from September 22nd to 26th. US dollar yen is 147 yen and 17 sen, euro yen is 172 yen and 48 sen, Australian dollar yen is 97 yen and 8 sen, Nikkei 225 is 42,966 yen, Dow Jones is $45,226, Japanese government bonds 10-year yield is 1.63%, gold is $3,573. On the 19th, the Bank of Japan decided to keep its policy rate unchanged at 0.5%. At the same time, it announced the start of selling its ETF holdings. This triggered a sharp drop of more than 800 points in the Nikkei. However, with annual sales capped at 330 billion yen, the impact is limited, and the index later recovered, ending about 200 points lower. In the US, the Fed cut policy rate by 0.25% in the early hours of the 18th Japan time. While the US-Japan yield gap has narrowed, the dollar-yen exchange pair remains stuck in range. Meanwhile, reverse repo balances are declining, which points to tighter liquidity. Many analysts see this rate cut as more of a political gesture toward the Trump administration, and the key question now is whether another cut will follow later this year. In Japan, attention is turning to the Liberal Democratic Party leadership race. Market sentiment suggests Koizumi has the upper hand, but even if he becomes prime minister, the overall market impact is expected to be limited. The biggest near-term risk is a potential US government shutdown. On the 19th, President Trump said, "We'll continue to talk to the Democrats, but I think you could very well end up with a closed country for a period of time." Many market participants dismiss it as yet another political charade. However, in the Senate, both Republican and Democratic stopgap funding bills failed on the 19th, bringing the risk of a partial shutdown on October 1st closer to reality. A shutdown could drag down GDP, push equities lower, and weigh on the dollar. With the US economy already facing recession risks, such an event could easily trigger a sharp market sell-off. Investors need to stay cautious this week. And finally, a quick disclaimer: this forecast is based on a statistical, stable convergence model. We take no responsibility for investment results based on this forecast and outlook. Stay tuned for more updates, and don't forget to subscribe and give this video a thumbs up. Thank you for watching. See you again next week.